scenario, it came down, and this was the top 4024, and this top is coming from the higher time frames. We'll discuss that in a minute. But yesterday, I think we've discussed that. We've beaten that point to death. That it's gonna hit that 4024 and probably take a breather. But if it cleared that 4035 would be it. I think we've done that yesterday. So now today, the immediate trade probably to the upside is right here, 38.99. Sorry, 39.99, and very likely we'll see a test of this 401 or 402 here, and the second standard deviation 4004 to 4005. If it clears here, then very likely we'll look at 4010 and reassess the whole thing after that. So upside, very little. I think about what 10 rather 15 points to the upside. And if it clears those 15 points, we are talking ES, so subtract about 5 points for to get to the SPX numbers. 4010, if it clears a 4010 to the upside, then we'll start to reassess the whole thing. Now to the downside, right about here is the mean, 3992, and then this point right here is the baseline for 3990. ES is the baseline for 1 hour half trend. Then very likely this is the point we look for a decent bounce, 3986, and we'll go on to the higher time frames in a minute. But this is where, yeah, so this is where we are looking at a decent bounce. If that breaches, we're looking for it to come back down here, 3980, and the downside remains again intact at 3970. Unless it breaches this 3970 to the downside, I'm not looking forward for any further downside. ES 3970, that would translate to about 3965 area on SPX, right? So that's the idea. By the time it comes down to 3970, very likely it's breaching the third standard deviation here on the 1 hour chart. Then very likely we'll look for a bounce again there. Now let's go here, right about here. Right, so 3970 here is again the mean on the weekly. Very likely scenario, it's going to come back down here, and we'll look for another bounce. As we speak, that trade is unfolding. What is that right here, right? This is the number that we're looking at for it to bounce first, and then very likely it's going to come down here. Cool. So the mean on the week is about 3970, 3971. We are looking for a bounce first. That breaches, very likely we have to deal with this mean here, which looks like a much more meaningful area for it to bounce. Give it a decent bounce, right about 3959, 3960 area. So yeah, so that's how I'm looking at the downside. 3970, if that crosses 3959 to 3960 area, right? So that's the mean on the week. That's if it breaches there, then we're looking forward for further downside. Maybe not a story for today, but this mean could be the story for today. And we will reassess, to the downside if actually it breaches right here, the 50 moving average on the hour, 3987 on ES, then we'll start to reassess all the way down here into 3970. So yeah, so that's the idea there. And here is the daily chart. And this line, yesterday, give me a minute, where is the 1 hour chart? Right, this is the 1 hour chart. Where did it bounce? Okay, yeah, here. See this thing here? Last moment it bounced here, 3979. I was expecting this to breach here and actually come back down into that 3970 line. But the moment I saw this line, I thought, nah, it's not going to bounce. It's not going to break here. At least, by the time it was getting closer to the end of the session. So but I was I would have been, I was actually rooting for this thing to breach below there and come back down into 3970. That would have been, much more meaningful of a bounce, so that this and this would not have happened, right? But now again, this happened, and then we'll need to wait for that 3970 again. Right. So here is much more meaningful trade areas. Right here, 3959, again 3955, and this line here, 3950. This is much more meaningful on that day. Many people not don't really watch these charts, the ES weekly and the ES hourly and all that. Many people, if they want to watch, this is the chart they very likely would be watching, right? And the 50 moving average here, it bounced and we got a crossover here on the SMI. The only thing that is bothering me to the upside is this cross is still to the downside, right? We have two pale green bars here on the histogram. That means the selling is subsiding, but that doesn't mean that it is still out of, it could be just a technical bounce because of the oversold conditions here. Could be just, hitting a major moving average. 250 are major moving averages. Every time you hit that, the price is going to make a decent bounce, right? Decent recovery. From here, it bounced all the way till here, 40.24 yesterday, and gave up, right? And today, again to the downside, the expectation is 39.70. That breaches, we are looking forward for that 39.58, 39.59, right about here. We are looking forward for this bounce again. If that breaches, very likely it's going to come back into its 200 moving average again. We'll look for another bounce again. Uh, and why do I keep saying bounces? Because the SMI is still crossed to the upside, right? And why am I looking at these bounces being ephemeral? Because this thing is still crossed to the downside. That's where the whole thing is right now. Keeps bumping, bouncing up and down without a clear direction. However, let's say this thing, starts to curl up and, this thing starts to get going again above the zero line. Then we look at the five for it to clear this four. Right now, this trade happened right now, right? 4003 hit the five and gave up. So if it comes back up again to the five and hits that five and clears that five, then I'm looking for a push all the way up into eight again, which right now is sitting at about 4022, 4024 range, right? That's the upside, immediate upside if it clears the five here. And very likely, even if I'm trading this bounce, I'll be very cautious with especially my zero DTEs. I'll be very cautious with this one, right? And if for some reason it comes up and clears this 8 here at about 4022, 4024 range, then very likely we're looking for a push all the way up into 4049, 4050. Although this is a hard ask. I don't believe it's going to happen, but let's reassess that thing if it does in fact clear the 8 at 4024 area, right? And let's look at this chart. This chart is quite critical. Why? Because the 5 and 8 are again acting as decent resistance, right? So, and if it starts to, and the mean hasn't, technically it's still not a mean reversion. 3970 would give it a mean reversion. However, if the price continues to move higher and say, let's say it stays around here at about 4024 area, and then probably, we can expect it to hit this 4028 number, 4030 number. Yesterday's, the projection from yesterday. If it does go hit this number and stays around here, then you can expect this mean to move up a little bit and hit right about here at 3974, 3975. Why is that important? Because that would technically mean that it has done the mean reversion. Although it is a false mean reversion, then I'm still looking at this number here, but technically that is still a mean reversion, right? And price just doesn't come back down, hits one time and doesn't come back and retest. That doesn't happen. So that's the reason I'm looking at this mean reversion to happen. Now let's go on to DXY. This is something here that everybody needs to pay attention to. DXY. Where is DXY? Right here. So everybody knows this chart, right? Everybody knows this chart. We've been watching this weekly DXY. Uh, watch what happened here. This is the 50, right? And this is the 50. We knew it was going to come back up into 50, and it's going to, 50 is going to be decent resistance. We know that. Now watch this line here. This line was way above 50 here, right? The mean. Mean on the weekly was way above here. It kept coming down. It breached the 50, and technically now it's a mean reversion, right? So that's technically a mean reversion. It's not a real mean reversion because the price did not go up, but it's technically a mean reversion because the mean came down. So now you can call it a mean reversion, but if you were not someone who was not watching this chart, you would say that this is a mean reversion, right? And then that's the reason you would conclude that because of the mean reversion, it came down. But that was not the case. The mean was up here just a couple of days back because the price came down so drastically on DXY, it came back down. However, notice that the DXY is coming down, but it's not correlating to US 10. Right? US 10 is still pushing up. DXY is pushing down, and that's the reason we are still having that struggle in the markets. So unless these two give me as a trader, these two give me the same direction, I'll be much more confident in my trades, right? And to the downside, let's look at DXY. Yesterday we've been charting DXY down here into 5, then into the 1 standard deviation, then very likely into the 8, right? This is what is going to happen, 104.40 area, and we'll look for another bounce. It's about 9 points from, 9 basis points from where it is right now. So very likely we're going to go hit this number and we look for another bounce. I am still not looking for a mean reversion here at about the daily mean reversion is about 103.65. I'm still not looking forward for that just yet. Unless the 8 breaches, then I'll start to price in the mean reversion. Right now the mean is about 103.65. Whether if it does actually breach the 8, then we'll start to reassess that, and with a bounce right about here at 103.97 area. 103.97 seems doable today. With 104 being a psychological level, there's nothing at 104. Maybe on the lower time frames there could be something, but if it breaches the 8, then very likely it's going to come back down here into 103.99 to 103.95 area, right? So that's the idea there. Now, why usually you hear me say that if DXY comes down, then the market will move up. Why am I not saying that? Because of this guy. This guy is still elevated, right? This guy is still elevated. Now, there's some other thing happening in the markets. The chatter now has begun that Fed will be a bit more hawkish. That's the chatter. There's no, that's just the expectation. Fed will go 50 on March 15. That's March 15 or March 16, whenever that date is. Fed will go 50. That's what they're saying. If Fed goes 50, very likely then the market, immediate reaction of the market will be to the downside. Very likely it will breach that 3900, and very likely we will see if Fed does 50. Very likely, I think the market will witness a 38 handle, or even yeah, closer to 38 handle. Yeah, I think SPX will lose that 39 handle. Very likely, very likely we'll see a 38 handle on SPX if Fed goes 50 bips. I'm still not pricing in a 50 bips, and the market hasn't priced in a 50 bip push on the interest rates yet. But seems looking at 2 year, it seems as though that's what Fed is wanting to do, because the 2 year is again hitting the highs. It moved down a bit yesterday after hitting those highs, and I think the 2 year is pricing in a 50 bips. I'm not clean yet on that thought process, but but by going by, why am I not clear on that 50 bips? Because the 10 year is not pricing in a 50 bips. It's just still saying that 25 bips. Very likely it will clear above that four threshold, and very likely we'll see a push to the downside. Probably will closer to 3900. I think if 25 bips, then very likely it will be about closer to 39. And if it's 50 bips, then very likely we'll see a 3800 handle, lower 3800s. Even probably, it will try to breach that 3800 to the downside. It's a 50 bips. Let's see what happens there. And that's why you're seeing the market going up and down and up and down, even with DXY coming down, back down. And it is not a one-to-one correlation that DXY down, the market's up. But if you have a high beta name, then you can correlate that high beta name to the DXY, and then you can trade that high beta. For example, Tesla, you can trade that inverse correlation with DXY. Yeah, let's go here on the lower time frame. It is trying to bounce. Let it bounce. Let it do its thing. But I still think it needs to go down here at about 104.38, and let's see if this happens. Very likely we'll see another bounce at that. Where is ES? Yeah, very likely we're going to see a bounce here, 3986 area. If that breaches, then again down here. Cool. I don't know if anybody took this trade. If you did, you did awesome. Right, let's get into Apple a bit. Yesterday was a good day for Apple, and let's plot the upside again today. The 50 moving average 149.86 to 150. Let's say if I'm wrong, rounding that up, rounding that up about 150, right, to the upside, to about 200, 2.5 points from where we are right now. Downside, if it breaches here, then you can expect it to come back into 146.97, and probably again we'll look for another bounce. 146, basically the 8 on the weekly is where we can look for another bounce. If that breaches, then we're going to come back down here into 145.50 area. That's I think that's the range for the day. And mean reversion on the week, it's about yesterday. I think we discussed this. Again, I don't think this is a story for today. 148, 143.80, 143.90. I don't believe it is a story for today. But let's see if it breaches this 8. I'm looking for a bounce at the 8. If that breaches, then very likely the 21. If that breaches, then again, this is not a story for today, but at some point in time, if it breaches the 21, then we are looking at a push down into the mean on the week. Right here, where's the 200 moving average? Here. So this 200 moving average is still fighting, right? This number is still fighting, and I'm very sure, not very sure, but I'm very positive that majority of the market participants are, basing their trades on this 200 moving average to hold. If it breaches, again, why hold? Simply because of these lines here hitting the bottom and bouncing. That's what trigger RSI does. Hits the bottom and bounce. That's why it is a trigger RSI. And yeah, to the downside, 200 moving average. I think immediate trade 142, 147.20 to 147. If it breaches there, very likely we'll see it 146.90 area. And then let's start to reassess that trade all the way down here into 144.80, 144.90 area. And why, even if it bounces again all the way up to, let's say, 148.80, or here at the 5, or here at the lower in a Bollinger Band, or even at the 8 on the day at 149.50 area, this would still be an ephemeral bounce to me, right? I think very likely people will look at it and they'll try to short it again here or here or here or here. So that's why I'm thinking this would be an ephemeral bounce. But why bounce at all? Because right here, this is about to cross, right? So that's why it will be a bounce to the upside, but this is still cross to the downside. So I think that will be a ephemeral bounce. MACD will still try to pull it down. So yeah, be careful with that chop. This will keep happening unless the technicals are resolved. Let's go here. Yeah, there you go. That's what is happening. Chop, 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 chop. Mean reversion done on the hour, coming back into the lower in a Bollinger Band. That breaches half trend here about 147.17. That breaches very likely. We'll look for a bounce right here. We'll look for a bounce right here at 146.97, 146.80 area. That breaches very likely come back down here into 146.53 area. And if that breaches, then let's start reassessing the situation to the downside, right about here, 146.50 area. If that breaches, let's start reassessing very likely into this number and this number. You know the drill. And the trigger RSI is almost at the bottom. So very likely either it will trigger here or here. We just need a major, what do you call, major spot to bounce. Either it could come from the inner lower Bollinger Band here or at the half trend, right? If that breaches the super trend. So by the time, let's say if it doesn't bounce anywhere and comes down all the way here to here at the super trend, then this thing will be decent oversold here. So that's why we start to look for that bounce, right? Cool thing. Nothing here in this chart is conclusive. Let's go here with Microsoft. Yeah, the range is the same from yesterday. It hasn't breached that range yet. So to the downside, again, this 248, whatever this 21 average on the week is, that is still the range to the downside. If that breaches, very likely it's going to bounce here at 248.30. Especially if Apple is bouncing, it will take Microsoft along with it to the bounce. Mean reversion, I don't think this is the case for today, but we'll keep a close watch on this 244.60 area. That's a mean reversion. It's not that far. It's just about 5 points from where it is right now. But those 5 points will be a struggle unless you see Apple moving down. Yeah, this and also you have this whole Chat GPT the AI, all that buzzing happening. So that will keep Microsoft from pushing further down. The upside, the 8 and then the 5. If it does breach the 8, then we're looking for the 5. And after it breaches the 5 on the week, about 251.80 to 51.90, then probably we'll start to reassess further upside. Uh, this chart this chart is again just like what do you call this Apple's chart, right? Look at this. It's in a clear downtrend, right? It's in a clear downtrend, but look at this. This is about to cross to the upside. So bounce, very likely the bounce might last all the way up into 200 moving average. This will act again as a decent resistance unless that clears about 250, 270 to 253 area. I will not be looking forward for further upside. But if it does come back up and clears this 200 moving average, then very likely it's going to go hit the 8, which is currently sitting at about 254, 80 or something like that. But I don't know if this is the case for today, but I'll be looking forward for a push all the way up here till the 200 moving average. Downside, same thing. Again, I'll be looking for a push. If it comes back down, we are looking for a bounce here and here, right? And if all that breaches, then very likely it's going to come back down here into this 50 moving average at about 246.80 area. Then we'll look for a bounce again. So uh, basically, what is going to happen is the chop, right? So be very mindful of your options, especially zero DTEs. Uh, let's go here. I think it's going to behave just like Apple. Same thing, inconclusive. But the downside, very likely we'll see another bounce here at about 248.50 to 48.40 area, right? That breaches then the third standard deviation, and if it goes past the third standard deviation, we'll start to look for a decent push back up. Now, here is the situation that is happening with the MFI. MFI is still oversold, right? So we just need a catalyst, either on the higher time frame or the lower time frame, for it to hit a number and bounce, right? So again, this is going to be a chop, unless I think we need for Microsoft, either it needs to bounce here or here, but it will bounce. It will bounce simply because it is oversold. The MFI is still oversold here, right? And look at the Williams R. It's pulled down all the way down here. We just need a catalyst for it to hit, and it'll bounce. Right. Let's get into a bit of Tesla. Tesla, I'm not really looking at downside unless this investor day happens. Second standard deviation breaches 210 to 11. I think few days back we were looking forward to this number. We got that. Very likely it's going to go hit this number. Investor day, that's the sentiment, right? 219, 220 area. If that hits, then we'll look for a push down again. And right here, if we take it, this is the number everybody is looking to get to, basically the 200 moving average on the day, and nothing on this chart says overbought conditions, right? So right here, the MACD is crossed, market is trying to go back up again. Look at the difference between this chart and Apple's chart and Microsoft chart, right? These were pretty much, the histogram was pretty much bigger in case of Apple and Microsoft, but here that's not happening. These oversold conditions just got resolved. It's not overbought anymore, but it is still not out of the wood yet. The cycle here, it was oversold. Cycle happened. The cycle is completed to the upside, and because it's Tesla, you can't say for certain that it's going to complete the cycle to the downside, especially with all the EV credits and all that happening, and this is one of those stocks where they say that AI is going to help this stock, or rather this company, tremendously versus other companies. So that's another thing that's happening. Let's see how it plays out. But to the upside, I'm still looking at probably a 219, 220 handle. If it clears that, very likely it's going to hit this 222. But if it does go ahead and clear this, I'm assuming that this will act as decent resistance, the 200 moving average. But for some reason it does clear that, then very likely it's going to go hit this 231 to 232 area. And that might be the case if investors and traders are satisfied with the Tesla Investor Day. So let's see how that works out. And I think it is going to be oversold on the lower time frame. Yeah, this is overbought. Sorry, this is overbought. Very likely. So let's say if it breaches here, right about 210, then we can expect it to come back here into 209. Especially if Apple starts to pull to the downside, then you can expect this to happen. If that breaches, very likely right about here, 207.50 area. If it breaches there, then let's start to reassess the whole situation to the downside. But I would doubt it. Even if it comes back down, I don't see it going past, let's say, the mean on the hour, right? I don't see it going past there. But of course, if Apple starts to, intensify the push to the downside because the 10-year is pushing to the upside, if that happens, then very likely it'll come back down and breach the mean. Very likely end up somewhere about here at around 201. That's the idea. Cool thing. Anything else? Let's just take a look at this thing. 10-year is it's hovering about the highs here. Look at this run in the 10-year. This is something, yeah, this is something serious. Let's see. If it breaches here, then very likely we expect it to come back down here into 3.90. And this, unless we get a decent cross to the downside here on the day for the 10, for the US 10, I'm not really pricing in, it's starting to make a trend, but I'll wait for this to cross over. Then very likely we'll start to make a trend to the downside. Now, well, 3 minutes to open, wanna under one. I want everybody to understand something. It is not an inverse relation. As of now, it seems like an inverse relation between the stocks and the interest rates, and that makes sense. But this is generally the barometer for growth, right? As you have the US 10 moving up, that generally means that the growth is okay. The economy is standing, the economy is doing good. That's what this represents. And as soon as you see this thing moving down, that would signal that the growth is somehow calming down or moving lower. The growth is not as robust as it used to be when the interest rates are going up, right? When the interest rates are going down, that generally means that the central banks are trying to provide liquidity by making the money cheaper. That's what that means, right? So it is not a one-to-one correlation, but and from the higher interest rate environment, generally when the interest rates start to come down a bit, market tends to rally, right? Market tends to rally. But then again, if the interest rates go down below a certain percentage versus stocks, then very likely you will see the stock market also follow suit with the stocks to the downside, right? Why is that? Because when the US 10, something like when a US 10 or US 2 starts to move down, that means the growth is slowing, right? Bear that in mind. All right, 1 minute to open. Let's get into live trading.